So guys, now we are in the second section where we will talk about Elliott Wave Theory. Actually, it has three basic rules. The first one is that the second wave never comes to the top or bottom of the first wave. The third impulse wave never be the shortest one among the impulse waves, and the fourth wave never enter to the zone of the first wave. But I would like to tell you that during my practice, all three rules were broken. But anyway, you have to look for such things like the exceptions, not the regularity. So now we will talk about a classical Elliott wave, as you see. So as you see, it has five waves, and this is the third wave. This is the first wave. It forms after down or up trend, or after the price movement beyond of support or resistance line of the flat zone. Because traders don't believe in a new trend, the first wave is significantly correcting by the second wave. Usually it corrects this first wave by 50 or 60%. So after the second wave the trend comes to third wave, and during our trade we will hunt this wave, but about it we will have a detailed talk in the next section. In this section we learn to identify the waves. After bull or bear's victory in the bottom or in the top of the second wave, more and more traders believe in a new trend. Thus the third wave has an acute angle and usually has the size equal to 1.61 size of the first wave. It could be identified by Fibonacci figures. At the end of the third waves, the bulls or bears start to take profit and leave the trade. After that, and the chart looks like a flat, and actually it is our fourth wave. After the fourth wave, the price comes to the last one, the fifth wave. It may be identified by the obtuse angle. The size of the fifth wave depends on the size of the third wave. If the third wave has the size like the first wave, the fifth wave will be a long one, by size and duration. Usually its size is the sum of the first and third wave size. If the third wave was long one, the fifth wave with higher probability will be a short one. But very rare may be possible that two impulse waves are long. Therefore you have to learn to count these kinds of waves too. If it is impulse wave, it may have 5, 9, 13 or 70 waves, and so on. For simplicity, just add 4 to 5. If it is correction, it may have 3, 7, 11 or 15 waves, and so on. Just add 4 to 3. Also, you have to look to large time frame to understand is the way that under your research is the correction or impulse wave. So this is the chart of New Zealand dollar and USD. As you see, the first wave is the long one. It has an obvious 5 waves. This is the first wave, the second, fourth, third, fourth, and fifth. Each of them has the same size as the third or fifth wave. Did you see? This is the fifth wave and this is the third wave. The sum of the third and fifth waves is equal to the size of the first wave. As I assume, now we will try to check it. So we have about 300 here, 3,000 pipes here. And what about here? It's about 2,900. It's about the same. It's about the same. Then comes the correction. It's most important part for us, because after the Elliott comes the correction, and we have to define not only the Elliott but also the correction, because after the end of the correction we will try to open the trade for the third wave. What about correction? Now we may see that it is the flat, but what about this case? What do you think? Do you have an idea what it is? It is the zigzag or flat? It's very important. It's very important to define it, because if we will enter to third wave and the correction will be flat, we will be out after the price will come down again. Look, if we will enter here somewhere here, for example, and this is our stop out, maybe the price, of course in that case it wasn't, but in other case it could be the irregular correction and the bottom of the A could be the higher than bottom of the C. It got broken. It may broken our stop, and we will be out. So what we have to do? And if we will look for the Fibonacci correction, according to Fibonacci correction, look, let's remove it. So according to Fibonacci correction, it was corrected by 50%. It could be zigzag as well as flat. So we have to go to structure of the flat of the wave to investigate it. So let's do the 1 hour frame. So that's our correction here. Let's assume that this is the A of the zigzag. This is the first one, this is the second one, this is the third one, this is the fourth one, and this is the fifth one. Then comes the B, and as you see, the top of the B, we have 3 waves here. But the top of the A, this is the B. This is A, this is B, and this is C. The top of the A is higher than top of the C. It's quite a normal thing, and this is the first wrong thing here. What about the next one? This is the C of the all correction, okay? And if you may see that the C has only 3 waves. This is the first, second, and 3. And actually, we may say that this is the second wrong thing here. And finally, the whole movement is more likely chaotic than trend movement, as you see. What about here? As you see, we have obvious trend: first, second, third, fourth, and fifth. What about here? The shadows is too long and sometimes enter to the zone of the another wave, like here. You see, it's like B here in B. So therefore, as I assume here right now, this is the flat, this is not the zigzag, and more likely I would not open the trade in that case.